everyone. Welcome to this month's installment of To Catch a Fraudster. I'm Tom Cronkright, one of the co-founders of Certified and executive chairman, and we are going to be diving into callback procedures in this session. And we've got some, I think, some fascinating and somewhat terrifying information to share with you as we think through what was almost an immutable last line of defense to protect wire transfers that in a generative AI world has, I think, forced us to rethink the efficacy of using that solely as a point of verification. As with any of our webinars on this series, our goal is to provide you and your teams with up-to-date information relative to scams and trends and best practices as things start to shift, as we see them not only from a certified lens, but also from our customer lens, from a title agency in particular. So fresh perspectives, really gritty information, and our promise remains to you that they're always worth the listen and the time. We're hoping that you'll get a few things out of here to take back into your organizations and your communities to be more alert and more protected as things go forward. So I am so happy to have with me Kimberly Casanova. So Kimberly serves on our Payoff verification team. Her formal title is Data Verification Specialist. Kimberly, thank you so much for joining. And if you could just introduce yourself to the group and what a day in the life looks like as you're protecting, I wouldn't even guess the number, but a lot of payoffs on a daily, weekly, monthly basis.
Yeah, definitely. I'm happy to be here. Yes, day in the life is mostly on the phone with lenders and businesses trying to get to a live agent to verify with some wire instructions. Outside of that, it's a lot of some back and forth with customers, just making sure that what they enter into our certified portal is matching what's in our secure database, if it already is in there. But if not, we call on them and make sure that there's safe wiring instructions. So most of my day is just in the weeds with these payoffs. I've seen hundreds and hundreds, thousands of payoffs at this point, and every day I'm seeing new things that are really interesting, and so I'm happy to get into it today.
Now, 100%. And for those that may not be customers of Certified or using our payoff protection product, what Kimberly is referring to when she speaks to a portal or a database is, we created a product a couple years ago that provides instant payoff verification so that as a title agency, you're paying off the current mortgage lender or servicer in connection with a transaction, we will provide that instant verification and insurance around that verification for you. And if for some reason we have a record we can't find or a record that appears to be changed, Kimberly sits on a team that administers that callback for you. Is that fair, Kimberly? As far as
yes, absolutely. Okay. Yep.
It's been a phenomenal tool. I can tell you, I'm also a large title agent here in Michigan. We would not live without that service. And I think as an owner, so I want to speak to owners and managers and team leads for a second. As I was thinking about this talk last night, the idea of verifying a payoff or this concept of even a callback is kind of a set and forget in an operational procedure, meaning as the owner, the risk manager, hey, we have to call back. Here's the process to call back required by the underwriters and Alta best practice and our insurance companies. And I'll get into that deeper in a minute. And then you just assume they're going to do it and that the information that is being verified, one, is accurate, and the person verifying it is providing an authentic and an accurate verification. And that's where the talk today is really going to center around, well, that's not enough anymore because of a series of things that Kimberly and her team have experienced. So think about us bringing Kimberly in to say, okay, this is something that Kimberly does every single day as a member of the Payoff Protect team. rather than just one task in a multitude of tasks that an escrow officer or curative or dispersing might need to do. So she's seeing it like at scale versus kind of by the glass that you might have for your team leads or your individual team contributors. So, all right, with that, we're going to do a quick flyover of how we got here, this concept of callback, and why it's even a thing. I ran some numbers on just how big the size of this is for scammers, like what's truly at stake. And then we're going to dive into and kind of challenge some of the conventional wisdom and security around callbacks, just to make you aware of the vulnerabilities that you might want to educate your teams on. And then we're going to talk about like what does success look like going forward. So, all right, we're going to roll. Let's do this. The history, what is a callback? So a callback is really meant to verify that the account and routing number, the recipient of a funds transfer, and in most cases it's an electronic funds transfer by way of wire because of good funds laws around the country. It could be ACH, but it's a phone call. And you're trying to just pick up the phone and get somebody on the other end that can essentially attest to or validate that the account and routing number that was received will in fact be associated and land in the account necessary to fully close out and settle the payoff, the seller net proceeds, commissions, direction of funds, whatever it happens to be. So the concept of payoff is kind of agnostic, and it became quickly that kind of gold standard or last line of almost immutable defense for validating information, to a point where Alta, other trade associations, and I think most importantly, the insurance community on the E&O and cyber side said, you know what, it's good enough for us to provide some layer of insurance, and I'll get to that in a minute. So it wasn't this somebody's brainchild. It's like the industry said this is an acceptable best practice. Okay, it started to show up in the 80s and 90s on more of an informal basis. The Federal Reserve starts to put out guidance on kind of like dual trigger or dual authentication controls. By the time we hit the .com era, I'll date myself a little bit, in the 2000s, we saw more, because Clinton passed the Electronic Signatures Act. I'm really dating myself now, but now electronic payments become more mainstream. And then 10 years later, it becomes codified, right? So this is like pre-BEC in real estate at scale. This is before we even tracked BEC, and Alta and other regulation entities said, okay, this is a best practice, and this is something that you can rely upon as you're authenticating a payment pathway, I guess. So let's look at it in a world where we are now. So pre-AI, trusted voices were very hard to fake or spoof, almost impossible. You just didn't have the technology to manipulate a voice marker in that way. The filters weren't that good. The fraudsters struggled with really understanding the insertion point, like how could I divert that callback authentication? Where would I even get the details to insert a fraudulent mortgage payoff or impersonate a seller? And then intercepting or even spoofing phone numbers to redirect a phone call or actually hack in and direct one live. Again, it wasn't something that they could do at scale. In a post-AI world, everything now has kind of changed. And it's not just AI, but it's like just the technology and what they've been using, these bad actors, to say, wait a second, we can do all of this now. AI voice cloning has been around for several years. Now it's moved into deep fake. Real-time large language models are removing what we would otherwise see as your typical misspelling or the language that just doesn't quite line up to what we'd normally see on a mortgage servicer or a listing agent representing a seller or seller themselves. And then the caller ID spoofing combined with these things just makes it more believable. So the advantage of trust or this conventional wisdom that said, hey, if I make a call back, and I'm calling Kimberly to verify this mortgage payoff, and it sounds like she's, reciting a green light, basically, yes, that's where you need to send the funds. I could trust that because nobody could possibly impersonate a human or convince me I'm not calling ABC Mortgage or servicing company. What have you seen to backfill some of this, Kimberly? Anything?
Yeah, I think with the AI, it's mostly been about a lot of pre-recorded messaging and not even getting to a live agent to begin with, honestly. And the caller ID messaging is something that we have been onto very recently. So I'm glad you included that in the slide. What we use is pretty advanced, but it still doesn't catch when a fraudster hacks in and just changes that caller ID. But it is really important for us to pay attention to not only the name of who's calling, but the phone number. Like, does it match the area code? Does it, does it line up in any way? And sometimes it doesn't. We can't trust that. When we left a voicemail, this person called back, but is it actually? So we do have to really take good measure to make sure that we're talking to a representative of who we need to be talking to. But I'm glad you included that because it is a very, very recent uh, honestly problem that we're actively solving for and cross collaborating with other teams within Certified to really get higher tech to kind of make sure we're talking to the appropriate person.
So if I unpack that a little bit more, you receive a mortgage payoff statement into the Payoff Protect. We don't have a record that we can say instantly this is authenticated and insurable. You're administering that callback, which the team does. We have a full team that does this full time, right? And you're saying that it's getting harder and harder, or more challenging, I should say, to authenticate the number on the payoff, right? Because you almost have to assume it's
Oh,
fraud.
yes.
And
Yeah,
then you leave a message and somebody calls you back, and
yeah,
that could be so there's like multiple ways that they can spoof that number to
absolutely.
convince you. And by convincing you, you convince any other person administering a callback, probably more, because
Right.
your spidey senses are way
hmm
up on this thing, right?
Yeah, absolutely. Phone numbers on payout statements, we can never use because of what you just said of if they're going to spoof the account number, why wouldn't they spoof the phone number too? And so, yes, we've had many instances where our customer does call the phone number on the payoff statement and gets it verified, but then we go the safer route, calling a secure phone number, and then those turn out to be fraudulent. And our customer was in fact talking to the actual fraudster. And so, yeah, that definitely happens and is really prevalent for sure.
And from what I've heard that, so let's say our customer is calling them, they receive a call back or they get somebody
hmm
live. I mean, it sounds like a professional on the other
hmm
end, right? I
Yes.
mean, there's no robocall. It's like
Right.
they're there. They
Yes.
sound completely legitimate. They're asking
Right.
all the right questions, right?
Yep.
And it makes it that much more believable. Almost like their own little call center for
Yep.
fraud to verify the
Yep.
fraudulent mortgage payoff
Yep.
instructions, right?
Yes.
Yeah. So what's interesting to underscore this, Sam Altman is the founder of OpenAI, ChatGPT, and this quote was interesting because his concern is elevated. And this is a very recent quote back from July that's just saying voice authentication just isn't going to get it done in a world where AI can so easily spoof so many things. And I think I don't want to over rotate on, AI is going to change the world in a minute, but you have to understand like this just completely provided a whole new set of tooling for these bad actors at scale. And it's because of those changes we want to alert you on how they're starting to show up in our day-to-day lives. And this is one that Kimberly's underscoring is the phone number redirect and the callback, and all of a sudden it's like, wait a second, is your employee, so I'll just ask the question because you need to change your operating procedure right now. If your employee is administering a callback and they leave a message and then they take a phone call back, that phone call, I mean, they could spoof the number where it appears to be coming from, and it's not actually coming from the mortgage servicer. It's coming from, a scammer impersonating them. So you always have to be the outbound call to do the verification. So with that, let's talk about what's at stake. And I think of this as our risk profile, but kind of size of the prize for the scammer. And this is why I think we're going to continue to really have to be intentional and address this in each and every payoff and file. So every year we do a state of the wire fraud report. We push it out typically Q1 of each year. Roughly half of all reported fraud cases last year included payoff fraud. It continues to be the most prevalent. It continues to be the largest risk profile that faces the title agency and title industry communities to date. There's not really a close second. On the consumer side, it's the buyer cash to close. But the mortgage payoffs continue to just really strain the industry. When you think about the scale of risk, so I did some recent research yesterday, think about these numbers. So on the seller net wire, we'll have roughly 4.7 million homes that are sold. There's a little over 200,000 of net equity on average in each house. So we as an industry are going to transfer roughly $1 trillion just on home sales. I'll get to cash out refinances in a minute. Just on home sales, we need to safely transmit $1 trillion this year from our escrow accounts to sellers, okay? Mortgage payoffs, right? So you got to purchase money, you got seller with an existing lien. This is not, again, this is some refinances, but we're out ready to move into a whole different scale. We'll have 1.3 trillion in mortgage payoffs that we have to safely administer the risk on, right? So we're getting the new purchase money or refinance funds in. We got to fully settle and disperse out the existing lender. That's 1.3 trillion. So 2.3 trillion on a regular disbursement cycle that this industry is going to manage. If you think about the risk profile, so this is what concerns and fascinates me. There's 100-to-1 risk ratio based on the average revenue generated versus the dollars that are being held in escrow. So for every $100 that's being held in escrow, the title industry really only generates $1 of revenue. So the risk profile is 100-to-1. You can say, okay, that's an interesting number. That sounds scary. Is that high or low? It's actually pretty high. So title insurance is 100-to-1. Credit card payments are 450-to-1. But again, that's kind of a black box. That's between credit card and merchant transfer, right? The clearing houses, that's even further black box because that's institution to institution. Banking and depository flows are 150-to-1. So we're approaching the level that we have the same risk profile as banks. But I'll get to why I think our risk profile is higher. But auto insurance, your homeowner's insurance, 1-to-1, maybe 1.1-to-1. And then the fees are what carry and the interest carry for that industry. Why I think it's the 100-to-1 has more impact than the 150 on the banking side is that every touch point for us is a Main Street touch point. We're dealing with the buyer, we're dealing with the buyer's agent, we're dealing with the mortgage lender, we're dealing with the seller and the listing agent and the mortgage servicer. Where on the banking, a lot of those are bank-to-bank transfers. And they're not holding other people's money in the sense that I'm responsible, I have true custody and control, and I'm responsible as a title agent for vetting and releasing that money. The bank contract reads very different. It's your account, you're responsible for vetting, and if you release it, We just administer the rail to push or pull money depending on where you want to receive or send it, right? And I think it's staggering, and it amounts to, and I've said this many times, an underpriced, like, self-insured risk. So if you haven't done this, and if you're approaching renewal on E&O or cyber, or you have an upcoming renewal in the next few months, like, dig out your policy and really take a look at what you may or may not be insured for as it relates to wire transfers. Most will have something called like a fraudulent instruction rider, an electronic funds transfer rider. Something will hang alongside of the E&O policy that will provide requirements for you to administer a callback. I'm going to read some of those right now because I have a summary from my insurance policy from the title agency perspective, and then we'll sublimit coverage down to typically 250,000. So from the policy, I won't read all the language, but it basically says, here's this, to have coverage, somebody needs to essentially call back and document using a phone number to a legitimate party, and it must be obtained by independent third-party sources such as the internet. And the conversation, the confirmation, and verification of the wiring instructions, mailing address, and the method used to obtain the phone number must be documented each and every transaction. So not only do you have to go out and independently verify who you're going to call or the address where you might send, I don't know, a carrier pigeon or a letter to, I'm not exactly sure. Most often it'll be a phone call, and then you have to document every single time how you obtained it and then what was the response on that verification. That's challenging. We've heard E&O companies that the title company administered the callback but didn't document it, and coverage denied. So just be really, I would say, wary of that, and make sure that your operating procedures line up to what your insurance companies may be requiring. All right, before we go to myths and bust some of those myths, Kimberly, anything that I may have sparked a thought in your head in the seat that you're sitting in before we
Yeah,
go?
yeah, I'm hearing it, and so I'm a little overwhelmed hearing all those uh those I's that need to be dotted, and just the other, that's just one of the steps for you title agents to have to do, and I'm overwhelmed hearing it. And so I'm glad you pointed all that out and encourage them to look at the policy for sure.
Well, you have to, and I've said this, it's a layered approach that we'll get to, but you have to make sure that your operating procedure supports the requirements in the insurance policy, and that you're able to pressure test that activity is being done, so that, God willing, you never have to go through a claim on your E&O for something like this. But if you do, and you can't prove it, or you don't have the documentation, you can expect that it's likely going to be denied. All right, so we're going to dive deeper into your world, and we're going to talk about a few myths that are out there, and we're going to kind of debunk some of those myths, or at least challenge how we might think about them. Myth one, I can call and verify, and whatever I get with a representative is accurate, meaning if I independently verify the number and I'm calling whoever it is, the call center, the help desk, the mortgage verification line, that is gospel, and send the wire. So Kimberly, thoughts on that? And then we're going to play a recording that is alarming. So
Yes. Yes, the only thought is that is a myth for sure. We're humans calling humans. So I think this recording will really shed some light on that for sure.
all right, so here's about a 4-minute recording. It is worth a listen. I've listened to this many, many times, and I just grind my teeth every time I do. And this is where Will, who's a member of our Payoff Protect team, called on a mortgage payoff. And we knew the mortgage payoff was fraudulent. So this was more like pressure testing. Okay, we know this is fraudulent. We've seen the actual Freedom Mortgage payoff information many, many times. We know what the account and routing number is. Let's see what happens when we call the verify. And I'm providing a copy of the statement. And I'll just say this before we play the recording. These mortgage payoff statements, if you looked at them 5 years ago, the fraudulent ones, you'd have like janky type font, or they didn't have the full advanced version of Adobe, and you could kind of spot it from a ways away.
Mhm.
And they're redirecting to a different bank. Think about a world now, and you'll hear this because the ABA is confirmed that if ABC Mortgage Servicing uses XYZ Bank, they're going to use a Money Mule account at XYZ Bank. So the ABA is going to match. The callback number is going to be the same area code for which you'd normally call back, right? They'll get a Google Voice number. So if it's a 616 where I'm sitting right now in Grand Rapids, Michigan, they're going to spin up a Google 616 number and try to find something close. Why? Because they have the actual authentic mortgage payoff statement. So they're taking that, they're manipulating it, and they're reinserting it into the workflow, the email, the fax distribution network, by way of the seller being spoofed. Your folks are going to see these things, and it just looks like an authenticated, updated one. So, all right, let's play the recording where, again, Will from Certified's Payoff Protect team calls on known fraudulent payoff instructions, and let's see what his journey is as he tries to authenticate these.
Just to confirm, sir, you would like to ask for the payoff. Is that correct?
No, I actually already have it. I'm just reading out what I have to see if it's correct. To send the payoff over to you guys. Yeah.
Sure, sir. Let me help you with that one. So, may I know what information you got there?
Yeah. So I have the routing number. And then the account number I was provided was.
And you were advised, sir, that you will be sending the payment over to this account. Is that correct?
Yeah, this is what shows up on the payoff statement. But does that sound correct to you? Because I have a different account number that we normally use for you guys to send payoffs.
I see. Let me double check that information, sir, real quick. Please bear with me. And by the way, sir, do you happen to have the loan number? Well, I can double check if the payoff statement that was sent to you is correct.
Yes, I do. The loan number is.
Thank you for that one, sir. So I'll be putting you on hold for about 2 minutes. But if I'll be needing more time, I'll make sure to get back to you after 2 minutes for update, okay?
Okay, thank you.
All right. Thank you so much, sir. Please stay in line. Hello, sir.
Yes.
Hi, yes, thank you for waiting on the line. So, sir, upon checking, yes, that is the correct routing number and account number. So, you can go ahead and do transaction and wire transfer the fund for paying off the loan.
So can I ask a question though? Just as far as the account number, what I normally use and have used for a very long time is a different account number. Do you think I could read that one out to you?
As for that, sir, I can only actually confirm about the routing number since that this account, while I pull up the information, it needs a special handling, and as an offshore agent, I am not allowed to handle actually this kind of concern. But to confirm that, let me refer you to our headquarters department who can better assist you instead, okay?
Okay, that'd be great.
All right. Please stay on the line, sir, and transfer you over now, and do not hang up, okay?
Okay.
Hi, whom do I have the pleasure of speaking with today?
Yeah, hi. My name's. I'm calling on a recorded line here on behalf of just to confirm some wiring instructions to send you guys over a mortgage payoff. And the reason is, yeah, for a payoff. And I think the reason is the number that I was provided as far as the routing and account number does not match your normal instructions that I'm used to. And so I wanted to double check.
Got it. I'll go ahead and help you out with that one. But do you have the loan number of the account you're calling?
Yes, it is.
Thank you. Who's the borrowers of the account and the property address, please?
Yeah, borrower is and property address is.
Okay, thank you. Let me see. You mentioned you were transferred to us, right? Yeah,
Yeah,
the account is actually handled by our onshore team, but since that's just a general question without touching the account, I'll go ahead and provide to you the wiring instructions.
that'd be great. Yeah, it's literally just the general info. So it'd be awesome. Yeah, if you want to go ahead and
What
read
do
what
you
it
have
should
on
be.
your end?
Yeah, so I have routing numbers
Okay,
and then the
that's
account
the right
number.
account number.
Yeah, yeah. So, and then the account number I was provided, and this is what is different from what I normally see from you guys, is
Yeah, that's actually not the right one. This is the right account number for payoff. Let me know once you're ready.
I'm ready, yes.
Let me repeat that again.
Yep. So that that one you just read is what I normally see, so that's why I wanted to call. For your information too, the person who transferred me over, she
Mm-hmm.
confirmed that incorrect account number for me, and that's why I was transferred because I told her I didn't think that was correct. So I don't know, just for your information,
Oh,
that's a little concerning.
got it. I see. Thank you so much for contacting us with regards to this.
All right. Absolutely terrifying, Kimberly. Like,
No.
he's knocking on the door multiple times, right? She even puts him on hold for a few minutes
Yeah.
to like seemingly verify.
Yeah.
He comes back to the well, thankfully, and basically is like, "Hey, are you sure that you're sure?" And then something triggers something that says, "Well, I guess I can't answer that question because I think all she had the authority to do was confirm the ABA
Yes.
number."
Right.
And then it escalates to some supervisor, and then it comes out that, hey, that's wrong.
Right.
So as
Yeah.
you listen to that, and I'm sure you have many examples yourself, like
Yeah.
what are some of the takeaways?
Yeah, it's scary out there, what representatives will say yes to. And yes, you're right. I think she only had authority to verify the routing number and wish that she just said that to begin with instead of saying yes to the account number as well. But because of our expertise and also, like you said, with Freedom Mortgage, we've seen Freedom Mortgage thousands of times come through safely with the wire instructions that we already have in our secure database. So whenever a lender has wire instructions that are different from ones we've seen thousands of times, tens of thousands of times, it's a big red flag for us because it just doesn't happen often. And if they happen to change account numbers or have a niche account number, it's pretty easy to verify that because we know exactly who to ask and which department that belongs to. And so for her to just kind of be so uncertain at first, and then you heard her get back on and yeah, I think that's right. It just wasn't enough evidence for us to feel confident about these wire instructions. So that's why he pushed and got to the next representative, which is important. Go with your instincts on these for sure, and your gut when it's screaming at you. Listen. So, and I think he just has. We've all seen it so much that we knew this. There has to be more of an explanation for if it is a new account number. Why? What happened? Why do you have a new account number? And if it's not a new account number, we know it's fraudulent at that point. So,
Yeah, and the challenge I have is that that would have complied with best practice for almost
mhm.
every
Yes,
title company's standard operating procedure. You would
yeah,
not have asked another question because I'm just trying to get to the next
right,
CD that needs to go out the door for tomorrow's closing, right?
right.
And I think a couple things that we'll go to on a best practice standpoint. But so unfortunately, and I'm not saying this is every single time, but we've had so many instances where we call to verify, we have the right representative from the right company on the phone, and they're just simply not paying attention.
Yep.
And I think of it as much as our employees don't want to make the call, the recipient doesn't want to receive the call.
Yeah.
Everybody's trying to end the call as fast as possible,
Yep. Yep.
right? So
Yes.
let's just get to this.
Yes.
All right, the next myth, I can just call the phone number on the document provided, and that's trusted. So how do you think about this one?
Yeah, we addressed it earlier with AI and everything accessible now to the general public, including fraudsters. And so we don't trust the phone numbers on the document provided because, like we said earlier, if the wiring instructions can be tampered with, the phone number can too. And so yeah, this has happened, and I think we'll get to this recording, right? So
Yeah.
I won't say
Yep.
much. I'll talk more after it, but yeah, we it it's likely tampered with if the instructions are as well.
All right, let's play this recording again where a representative of the Payoff Protect team is calling just to verify, again, the phone number that we see on what we believe is a fraudulent payoff statement. So let's play this.
One last question. I have a phone
Sure.
number on this payoff. It's a 417 number, but it's different from this one. Is there a way you could verify that this phone number is attached to so that I can give them a
Sure.
call? Okay.
Sure.
It's
Okay, let me check one more spot here for you.
okay.
Okay. That is not a number that is attached to any of our branches or anybody employed by.
Interesting.
All right, a quicker recording. What's interesting that I found on this is the area code matched. So you could hear the representative that said, hey, I get the area code, but nowhere in our database for our bank is there a number associated with the number that you just provided.
Right. Yes. And these were wiring instructions that were already red alert, not looking great, and we weren't feeling good about them. And then when he said, no, that's not a phone number of ours, that kind of put a pin in it for us, and we knew, okay, this is all really suspect, and we knew from there it was high risk at that point.
I think the underscore there, and it's a reminder as I put my title owner hat on, is you have to verify the phone number as much as you're verifying the bank credentials because one is codependent on the other, right?
Yes.
All right.
Yeah.
The next myth is kind of what we talked about before. It's that, well, surely somebody on the other end is taking this serious because they understand it's a wire transfer, and by definition that usually has a couple commas in it, right? So here's a situation where it underscores that mortgage servicers, mortgage lenders are eager to get the confirmation kind of over with. And I'm not trying to be too cynical on this, but again, if we don't want to make these calls and they don't want to take the call, I think this is an example where we have a representative from a bank who appears to have been walking his dog at the time. We knew the instructions were fraudulent, and we added more characters onto the account number just to see if they would identify it. And let's play this recording on how this thing shook out.
Thank you for calling. Who am I speaking with, please?
Hi, my name is and I'm calling from Certified on behalf of on a recorded line to verify some wire instructions for incoming payment.
Of course. What's the loan number? Thank you. And what's the client's name and address, please? Thank you very much. And we're calling in to verify payoff wiring instructions, right?
Yeah, I can read that off whenever you're ready.
Yep, ready.
Okay, so the routing number I have is
That is correct.
okay, then the account number I have is
That is correct.
All right, again, like totally unacceptable. And I think he was just going through the motions of, okay, what do you have? Yep, that's good. What else do you have? That's good. All right, have a great day. I'm going to continue on like walking through the park.
Yeah.
But as you hear that, what comes to mind? And we have one more myth to bust after this one.
Yeah, yes. That one, walking dogs, we've heard it all, right? Driving, we've had a guy on his tractor, screaming kids in the background, and people are human and distracted and or in a rush and want to get paid, and honestly, and so I think I pay attention to what's being said, but also the context of the person who's on the other end of the line. Are they do they seem like they're paying attention? And if not, feel free to use that trick of the trade. I mean, we do it all the time. We leave out a digit, we throw in an extra zero, and just make sure that they're really listening. And if they say yes, we usually just call back later, or have someone else in the office call back and do a double verification on that one. We don't send it through unless we feel confident that they are paying attention, and not distracted or in a rushing to get off the phone.
Yeah, or have them read back. I think you're right.
Yeah,
You hear a
yeah,
tracker in the background. You
yeah,
intentionally leave off the 2 digit at the end and say, you know, I think I
right,
made a mistake. Let me read this back, and then
yeah,
have them read back because they're not writing down what you said.
right,
Right? And
exactly,
had you forced this guy to say, hey, could you repeat back
right.
what I just gave your wiring instructions? And then it would have came very clear that but you said this, and you just verified that, right?
Mm-hmm. Yeah,
So yeah, I think you have to be your own kind of patient advocate here a
yes,
little bit, right?
exactly.
um, the other one, and this one's really concerning, is this idea that lenders will always take the most secure route to verify instructions, right? So sometimes you have to submit a request to verify. You're trying to get them on the phone. Lender refused, in this case study, lender refused to verify payoff wiring instructions on the phone during a suspected BEC, and rather they wanted to email the client to confirm instead, right? So just the craziness as that comes out of my mouth to say, you know what? Yeah, we're really concerned that there could be some fraud here, so we're just going to email the wiring instructions to confirm.
Mm-hmm.
Where you have to assume that somebody's email account is compromised and those instructions are in the wind. Is that
Right.
often though, Kimberly? Do you see that often where email verification from lenders?
I have recently, yes, more often than not, with especially banks that we're calling. I don't know, something happened in the bank world recently, but they are getting very strict about not verifying over the phone, with just the customer care representative. And then they do say, why don't you go ahead and email us a request for a verification and we'll call you. And it's very backwards. It doesn't make a lot of sense, but that is a very recent problem that is becoming more and more prevalent.
That's concerning. All
I
right,
know.
let's pivot to with all this information and all like the real-time intelligence that you have and the team has on the Payoff Protect side, what does success look like, right? So let's just a quick summary. Fraudsters continue and will continue to exploit what I call the bridge of trust. We've talked about that since early days of Certified. This is just your standard. I am trying to impersonate somebody to get someone else to believe that where they're sending the funds is the proper account and routing number for whatever the task or activity is at hand. Mortgage payoff, seller net, commissions, whatever it has to be. Callbacks remain important. I don't want you to leave this to say, man, Tom is just hating on callbacks for like 40 minutes here. I'm not saying that. I'm saying that it sits in a layered stack of verification. We use them every single day here at Sun Title in our agency, right? And Kimberly, you're administering callbacks right now. It's not like we can verify it any other. So it's not that they're going away necessarily. It's that it has to move from like a last line of defense to a stack that you need to think about. It takes the training and it takes advanced technology. And I think we're going to continue to see these losses mount. So as we think about this, and then we have kind of an exciting announcement in a minute on what we've done to level this thing to another stage in our growth to prevent mortgage fraud. Out of band verification. Out of band just means if I got an email, I'm going to make a phone call. If I got a phone number on a set of wiring instructions, I'm independently verifying that number, right? I look up the address. Go into your treasury portal. Have I sent a wire to Mr. Cooper or Wells Fargo in the past? Have I done it 50 times in the past? Has it ever changed? Like, history leaves clues, right? Success does leave clues. And if something changes, don't just solely rely on your employee to detect that change. You have to validate account ownership with technology. Like that's why we created Payoff Protect. Mortgage fraud should no longer be an issue in the real estate sector. It just shouldn't. Every single record, every single time. Kimberly mentioned it. We've seen some of these mortgage servicers tens of thousands of times. That's called consortium betting. Like we can see it. We see it every single day. It's still good. You can trust it. We saw it today. We'll see it tomorrow. And the next day after that, you can continue to trust. And if it changes, we'll address that change. Multi-factor workflow, making sure that this is my biggest concern, is that a mortgage payoff statement comes into the title production software, an updated one comes in, and then the downstream employee in disbursement thinks the upstream title clearance or escrow did the callback, and they're missing the note that they call back on the first one but not the second one. Where's that dual trigger, right? What did you use to independently verify? Are you documenting it? AI-enabled fraud detection. This is becoming more advanced, but I listened to a podcast over the weekend that Tyler sent me where AI is helping to defend against other AI threats. And we're going to see more technology enablement in that. And you can't train your employees enough. You almost have to assume that every single mortgage payoff is fraudulent. All the information is going to appear real, and you have to verify the phone number, the authenticity of the source of that information. Anything else on the layered defense? Otherwise, we're going to get to kind of our special product announcement.
No, yeah, you covered everything I would say. Independently verify everything you can. Don't trust anything on that document or statement unless you've seen it thousands of times.
Yep. And then again, backfill with the insurance policy to make sure standard operating procedure and documented behavior lines up with any form of insurance that you may be paying for. Okay, we are now launching an expansion of the essentially mortgage payoff and payoff protect solution by one-click payoff ordering now in the portal. So what Certified is now allowing you to do is within the Certified portal is to request the actual initial payoff right within the portal. So you'll have a borrower auth or a mortgage payoff auth that you'll upload. You provide a little bit of information on the client and the loan information, and we will administer and keep you updated as we're administering that payoff. So our goal is to offload, and selfishly I want this for our agency, is to offload this entire risk profile from beginning to end on mortgage payoffs. We could not be more excited. We're super stoked about having this additional enablement. So now not being able to just verify the payoff you received is authentic, but allowing us to go get that for you. And then obviously by extension, when you rely on that in the portal, then you're protected for the outbound wire. It's that simple. We're just trying to put a bow around this whole flow operationally of the friction and the risk, the outsized risk on the mortgage payoff side. Kimberly, what did I miss? I know this is exciting.
I'm very excited about this one for sure. It'll really, everything we've been talking about, this is preventing it's getting in front of all of that at the very beginning. So I'm very excited about it.
Yep. So to learn more about that, and I mean this, like mortgage payoff risk should no longer be part of the real estate or title industry lexicon. There's just things that have been solved over time. This one is completely solvable, right? So scan the QR code. It's not a scam. It's an actual QR code where you can learn more about what we're doing on the payoff side, especially with the instant payoff verification and now ordering and us administering the actual origination of the mortgage payoff end to end. And then if you're a certified customer, get with your account executive and reach out. We can provide a demo of this new solution. If you've been considering Certified or you haven't even heard of us in the past, we were founded based on a wire fraud at Sun Title here in 2015, and our mission has been and will continue to be the extinction of this threat throughout the real estate, sector. And while it's not anywhere close to that, we have the tooling to manage this risk at scale. And we're going to continue to tool against the risk profiles as it continues to move. So, Kimberly, any parting thoughts?
We're here to help. We our bread and butter is catching frauds. So please let us help you prevent any fraud from happening in the first place. And I'm excited to for this payoff ordering and how it's going to really advance that.
Awesome. I'll thank you on part of the entire industry for the work that you're doing every single day, as long as well as the other members of the Payoff Protect team. It's truly God's work. It's not easy. It's so important. It keeps our doors open. So
Yeah, thank you.
with that, I'll sign off. Thanks for attending, and we look forward to seeing you in next month's To Catch a Fraudster. Take care.